Hello, you're watching InstaForex News on InstaForex TV. Unexpectedly, the primary commodity prices outlook has started to worsen. The murky situation in the American real estate market caused the decrease of prices for such goods as wood and copper. The European authorities implement the measures of austerity. The risks of the possible second recession wave for the region at least reduced the anticipations about the issue. Earlier, these fears led to the growth of oil prices after the incident of oil spillage in the Gulf of Mexico on the platform Deepwater. The signs of that the Australian government will possibly decrease the tax on excess raw production can release the growing pressure on the mineral raw prices. Moreover, the factor of China still exists. The decision of the country's authorities to allow the national currency slight strengthening can partly decline the volume of speculative demand for raw on the domestic market, which caused the prices enhancement last year. Huge pack of the fiscal and monetary measures of the Chinese economic stimulating, including the yuan rate binding to the US dollar at a made-up understated level, was reflected in the demand for raw the following way. First of all, a significant part of the funds was directed to investments, more specifically to production capacities, infrastructure and real estate building. The yuan firming should help to make the investment plans of the Chinese market players more realistic. The second aspect is directly connected to speculative demand, as the Chinese investors found application for huge monetary funds emitted by the country's central bank in view of establishing of the national currency rate bind to the US dollar. These funds were invested in highly liquid assets which price does not threaten the inflation, in iron ore, copper, aluminium, zinc, oil and other raw commodities. And it's not a mere chance that these manufacturing and energy commodities, being the investment assets, are at the same time important for the development of the country's infrastructure improvement. The inventories can be sold on the domestic market. The exception is gold, which cost has always enhanced amid the investors' worries that the policy of central banks will gradually lead to a surge of inflation and/or fears about the default of some countries. However, the raw prices are very likely to have exhausted their potential of growth. Primary commodities were bought for borrowed funds by the investors who were interested in the global economic uprise, and as it has revealed after the credit crisis, using the borrowed funds hurts both parties. If the global economy falls, the raw prices will plunge over proportionately. Follow our next releases and goodbye.